Good morning, good evening, good afternoon to wherever you are in the world. Welcome back to another episode of the Coffee Hour. Today we have just a little bit of news. All right, so it's going to probably be a light session. I put this stream together in like 30 minutes, so I woke up really late. Was not even sure I was going to be streaming today, but anyways, enough about me. All right, today we're going to be going over Orcl earnings. We have some news on Nvidia as well as Palantir. And we'll just cover some general market news as well. All right. So as always, appreciate you guys joining me for the stream. And like always, I have to get this uploaded. Hold on one second. Post this. Joining me for the stream.
Oh boy.
And like always, I have to get
It's weird
this,
hearing yourself talk.
uploaded. Hold on one second. Post this. Joining me for the stream.
Okay.
Oh boy. And okay, there we go. Yeah, it's weird hearing yourself talk. Okay, guys. So anyways, there's we're going to cover just a slight amount of news, what's happening in Iran. Pete Hegseth, the Secretary of Defense or Secretary of War, also had a press conference earlier today, basically going over the war in Iran, as well as General Kane, who gave some thoughts as well, or gave some insights. I see we have Skeptic in the chat. Hey, welcome, man. Always a pleasure to have you. So anyways, guys, let's get into it. All right, let me stop yapping. Let me get into it. All right, so here we go. All right, so as always, appreciate you guys. Here we go. All right, so actually not too bad. Today was actually not bad, and I'm looking at the overnight markets, and it looks pretty green for a lot of companies, a lot of tech companies. Orcl was actually up quite a bit. All right, but here we see the SaaS apocalypse continuing. All right, the SaaS apocalypse is continuing on the news, on the announcement that Nvidia is going to be doing their own open source AI agent, right? We're going to be covering that here in just a bit. Nvidia catching a huge jump, 1%, if that's even a huge jump. All right, but this is what the heat map looks like. All right, guys, we have Walmart 63 basis points, Amazon catching up 39 basis points, Apple a little bit in the green, Meta 1 full percent because they did acquire a company. We'll be covering Meta as well. All right, so this will have some big news. I'm actually surprised Palantir was down as hard as it was today. Because they actually have a partnership with Polymarket, which we're going to also be covering in this news stream. All right, so for the S&P 500, down 21 basis points, year to date down 1.12%. All right, still not doing well. All right, still not performing as well. Some of the international markets are doing way better. You have some of the ETFs, the international ETFs, doing exceptionally well. Things like IDVO from Amplify. There's also EWY, even though it had a pretty big pullback, it is still doing far better than the S&P 500. IGV, all right, we use this as kind of just a barometer to see where we're at, in the kind of risk on space, and still not doing well. All right, still not doing well, still down quite a bit, 16.54%. All right, for gold, we actually had to jump up. All right, so that's good. We're going to cover a little bit of gold and why we're getting kind of a rise to the top, right? A continued grind higher approach. IDVO, we have R14 Real in the chat. Hey, welcome. Boo, want more red for a little longer. I agree. I am hoping that we stay red at least until the end of this month, because there's definitely some ETFs I am looking at. All right, some ETFs that I want to hop into, but I don't want to hop into them too early, right? So I'll probably deploy half into one, and I'll talk about that maybe a little later if I remember to talk about it. So I did mention it in the Discord, the ETF I have in mind. It's Miney from YieldMax. That's one contender. I'm kind of deciding if I want to do that or a gold, silver, copper ETF, several different ETFs. I haven't quite decided on how I want to approach that. Anyways, getting back to metals now that we're on it. Silver climbing higher. All right, climbing higher. It has been rising over these last couple of days. Still down quite a bit, all right, from its former high of $105. Okay, but it is looking like, it's starting to climb a little higher. We had this, climb up 28% from its low, year-to-date low. And then, we had this big sell-off because of what's happening over there in the Middle East, right? Okay, Bitcoin, It actually did hit above 70, right? It reclaimed 70, and then it just had kind of a sell off, right? But still bullish on Bitcoin, bullish long term. I don't see anything going wrong with Bitcoin over the next couple of years. If you guys are a believer in the power rule, or if you've read about the power rule, or the 4-year cycle, there's a lot of price targets out there. Some of the bullish price targets out there puts Bitcoin at about 550 in 2030. And then, if you're probably taking a more conservative approach, I think it's like in the 400s. So again, I mean, I'm not saying go out and buy any Bitcoin or anything like that, but for me personally, I kind of like that risk reward, setup. I could wait a couple of years for sure. I can wait a couple of years. All right, moving on from that, we have from Roundhill. All right, so Roundhill, we covered this before, but Roundhill is changing WPay. All right, so for any WPay holders out there, calling all WPay investors. All right, starting March 20th, which is fast approaching, WPay is evolving, and the fund will focus exclusively on weekly pay ETFs tied to the U.S. market leaders. Why the change? Because we've heard your concerns. The fund is evolving to a more concentrated basket with modified market cap weighting and quarterly rebalances, a streamlined approach to intended to improve consistency and support potential stability. So I like this from Roundhill. Big fan of this. I like that they're moving towards an index approach, market cap weighting. They're only going to have the top, 25 ETF or 25 companies, and their ETFs are going to make up WPay. So that's a big, big deal in my opinion. Okay. So anyways, just checking the chat here. So R14 Real says, I noticed in the Discord you mentioned KCOP, KSilv, and others were out of your list. Why is that? I'm not discounting them yet. I'm just deciding what I want to do. Because the reason is I don't want to have, I do want to have, and I don't want to have. This is the situation, right? I could put money in KCOP, KSilv, and KGLD or YGLD or GDX or GDXW or GLDW, right? There's all these gold ETFs. But when you start doing that, at least in my opinion, when you start doing that, you're going to have all these different themes, like all these different ETFs competing for basically your money, right? It's hard to move the needle. I would rather just one basket, and that's what makes Miney kind of attractive, in my opinion. It holds pretty much the whole basket. I'm still deciding, though. I'm still really deciding. I would like to have a KCOP position, but at the same time, if I could just have Miney that has all of that stuff, and I still have the miners and everything else already, I could just go with Miney instead of having KCOP, KSilv, KGLD, YGLD, or SLVX, or what is it, GLDN, right? There are all those other ETFs out there. It's not that I'm not getting, not that I don't like them or like them. It's just I'm trying to decide what makes the most sense. Because again, if you're gonna have 10 different ETFs in your portfolio, right? All to different, metals and sectors. I mean, it just gets hard to move the needle, in my opinion. So that's it. But yes, Skeptic did mention a bunch, Remex, PIC, and Miney, right? And he does own some. So that is just my thoughts on that. But anyways, coming back to Top W/WPay, WPay will be changing on March 20th. Again, I think it is a huge, huge deal. Considering that WPay has been kind of abysmal over these last couple of months. When I say abysmal, I really mean that. Like yes, the market is down, right? These ETFs are also down, so I get it. But I think this is a big, big deal because it did have MSTW coin, right? And coin COIW, and those two were dragging this ETF down into the dirt for sure. Those two ETFs were absolutely killing it. But I think it going into a market weighted index approach, hopefully that will improve this ETF. So that'll probably impact the distribution as well. I don't know what that distribution could look like because now you're relying on pretty much the Mag 7 for that distribution, right? For that distribution income. So more to be followed, right? More to come. I'm not saying go buy WPay either, right? Okay, we're going to be moving into our geopolitics segment here. All right, we're going to be talking a little bit about Iran, what's going on. Again, try to keep this, as objective as possible. I don't care about your politics. I don't care about my politics, right? I'm not going to try to bring my own politics into this. Red, white, blue, green, I could care less. I'm just an investor trying to make money and understand the markets, right? Because all the stuff that's happening overseas impacts our portfolios. All right. So anyways, here we go. All right. So Hegseth said Tuesday, which is, today, your guys' time, will be our most intense day of strikes. All right. So they went out and struck Iran a bunch of times. Defense Secretary Pete Hegseth said today will be our most intense day of strikes in Iran. Iran stands alone and they are badly losing on day 10 of Operation Epic Fury, Hegseth said at a news conference at the Pentagon. He was also there with Dan Kane, or General Kane, as well. Hegseth's aggressive and confident comments echoed those made a day earlier by President Donald Trump to reporters at his Miami area golf club. If Iran does anything that stops the flow of oil, which they already have, within the Strait of Hormuz, they will be hit by the United States of America 20 times harder than they have been hit thus far, Trump wrote in a Truth Social post. Okay. So that leads us to this next segment coming from CNN. Iran began laying mines in the Strait of Hormuz. All right. If anyone is a aficionado of geopolitics or, war, I guess I hate to say it that way. But the Enforcers channel, I really recommend people check them out. This is really where I get all of my geopolitics from, right? This channel is one of the best channels out there. Okay. And I'm not afraid to share that or give them a shout out because I've learned so much from them. But they had called this out a month ago, maybe 2 months ago, when this was all starting to kick off, that if Iran, or that Iran would definitely mine the Strait of Hormuz, and that's going to impact shipping all the more, along with, everything else going on, Iran striking ships over there. This is a huge, huge deal. This is a big escalation in this conflict, because now for sure, exactly where they're mining, right? The article doesn't really say it. And of course, the military is not going to let us know where, but, they are starting to mine it. A couple of their mine ships were hit and sunk to the bottom. That is, again, if they were able to lay the mines, that is a huge, huge deal, because this is just going to continue to impact vessel traffic through that Strait of Hormuz, right? And we're already seeing the impacts of that. Okay. Some of the impacts, especially in Asian countries, are here we go, right here. So Thailand, right? These are Asian countries that depend on energy from the Middle East. Thailand is already implementing a full work from home for most of their government workers. And probably the commercial sector is going to follow suit as well, because gas prices, gas stations are starting to close up. They have no more fuel and they can't raid, excuse me. They can't raid the oil reserves in order to bring that up, right? They don't know how long this conflict's going to last, and the Trump administration is saying that it's potential to last a little while longer. You have CENTCOM, which is a central command, saying that that this conflict could potentially last until September, and you have Iran that's not capitulating, and they definitely don't want to come to the table. They've been pretty vehemently saying that, the United States will not determine when this war ends. All right. So Iran has been striking everybody left and right. I mean, there's that Danny DeVito meme where he's like, and then I just started blasting. Right. And that's exactly what Iran is doing right now. So anyways, Vietnam also is encouraging work from home. Philippines, energy saving policies have been introduced. Malaysia, fuel price controls maintained. Singapore, strategic reserve review is underway. You have Indonesia monitoring the situation. All right. So again, a lot of stuff, a lot of countries rely on this energy. And there was a little bit of news from this, right? Which turned out to be fake, which was a total fake out in the energy markets. So the Secretary of Energy, if I'm not mistaken, Mr. Wright is his name. I don't know his first name, Christopher Wright, maybe. But he had posted something on X saying, "Hey, the United States is now, ferrying ships across the strait." And then he deleted that post because that sent oil markets, going down, safety, right? This safety there, and then the actual truth came out and said, no, that's not the case, right? The Trump administration came out and said that is not the case. So absolute big deal. So I see we have in the chat, let's see. We have dividend Sith execute order 66. A good soldier follows orders. All right. So let's see what else we got. We have super straight guy. Hey, welcome back as always. All right. Okay. So anyways, going back to this, again, the news surrounding Iran and what's happening over there, the impacts to oil. I mean, just think about farms, right? Think about agriculture, because I didn't even really stop to think about this either. But even in agriculture, you need a lot of fuel, right? You need a lot of fuel to power the machines that go out and farm the land, right? I'm not a farmer, all right, so bear with me. I have done a little bit of farming, all right, but not to the level of some of these. I'm sure some of these people in the chat or probably viewing this stream, right? But yes, a lot of equipment is used in farming, and when fuel, especially in the Asian countries, when fuel is no longer being given out because they need to ration it, that is a recipe for disaster. So again, energy is going to be the main theme going forward, in my opinion. It could, potentially lead to higher costs. Higher costs means higher inflation. Higher inflation means no Fed rate cuts, right? And we already kind of know this, that we're not getting Fed rate cuts, at least until the new Fed gets in. But if this continues, if this persists, well, there is a chance, right? And we covered this in the previous stream, that there is a chance that the U.S. could start heading towards a recession because of oil, right? But I'm not trying to fearmonger anybody. I'm not saying it's going to happen, but the math does kind of point that way, right? The data does kind of point that way if this sustains the way it's going, right? The G7 already has met, and they're working on releasing oil reserves to bring down energy prices, to bring down the costs of energy. So we'll see what comes of that. Coming from the Kobesi letter, the IEA has proposed the largest release of oil reserves in history, exceeding 182 million barrel record set in 2022. Per the Wall Street Journal. Details include the proposal was circulated at an emergency meeting. Countries are expected to decide on the proposal Wednesday. The proposal will be adopted if none objects, but even one country's protest could delay the plan, officials said. IEA members currently hold 1.2 billion barrels in crude oil reserves. Oil prices are still up 60% since December. All right. So I don't know about you guys, but I am loving all this winning. And I appreciate Super Straight Guy for the $3. You know what? That's going to go to the coffee fund. I appreciate that because I am actually getting through probably my first bag. I have another bag lined up. So I'll have to start thinking about what I want to get next. So I appreciate that. All right. Really do. We have from Sith Mordor. Hey, welcome back as always. Bitcoin only goes down when I invest in a related ETF, and it only goes up after I sell. Brother, I am with you right there, man. I am with you right there. All right, because that happens to me all the time. Shout out to the 115x viewers. All right, I appreciate your guys' support. Shout out to the 25 viewers on YouTube. All right. Really appreciate all you guys joining me in on this stream. Okay, guys, so hit that like, hit that subscribe, follow. All right, I do appreciate it. Does help this channel out tremendously. All right, let me get rid of that. Appreciate you guys. Let's see. Coffee is king. Absolutely 100%. If I didn't have this coffee right now, guys, I would not be alive. All right. So we covered that. All right. Now we're going to move away from the Middle East. All right. The geopolitics section of the or segment of this stream. And we're going to go into some market news. All right. So first up, we have Tom Lee, who's going to talk about us going higher in March. I do not know how this man can remain this bullish. But man, Tom Lee is a perma bull. All right, so let's listen in on what his thoughts are.
Tom Lee of Fundstrat, the co-founder, chief strategist, joins us now here at Future Proof. You're a brave soul wearing a suit and tie here on the beach, but it's how you roll, Tom.
Yeah,
welcome.
I guess that's being a contrarian, right, Scott?
Yeah. Well, I'll tell you,
His hair is messed up. That's a bullish signal, guys. All right, that's a bullish signal right there. His hair is all messed up. All right, let's continue.
You sort of are. Now, you're not negative on stocks, but you do have a base case that at some point this year we're going to go down 20%. That we're going to have a bear market. Was this the first whiff of that?
You know, our take is we do expect that decline to happen when markets don't respond to good news. So I think we're in a period where we had a bear market already in software, the Mag 7, and in crypto. I think that's already taken out a lot of speculation. So to me, I think our bet would be markets are actually going to lift through the end of the month, that we're going to actually be positive for March and maybe hit 7,300. Later in the year is when we think a bear market might show itself.
What about oil, right? We're watching it so closely. We're driven by headlines, some of which are apparently erroneous. I don't know what do you
talking about, you know, the U.S. Escorting all these ships through. Well, they're escorted one, and then that turned out to be fake, and then oil spiked back up. So, anyways, continuing on.
Do with that?
Yeah, I mean, it's a very confusing time. I think it's very difficult if someone's trying to trade both the headlines or trade oil. But if I look back at the last 2 days, oil's $15 higher than it was last week, but the S&P's higher. So to me, the market actually is handling higher oil prices better. And, you know, we wrote in our note this morning that we think higher oil prices are actually good for the U.S. stock market.
Yeah, see, I think that's going to be a really hard sell for people who are watching this program, like trying almost too hard to paint some bullish scenario. How in the world are higher oil prices, which then mean even higher gas prices, which mean higher jet fuel prices, and all sorts of other issues that are related to that, input costs on a whole number of other industries? How is that possibly good for the stock market?
Yeah, part of it's a relative. You know, one, U.S. is an exporter of oil, so we net benefit as an economy from higher oil. The second is other countries are importers, so the U.S. not only looks better, but on a relative growth basis, it should outperform, which means flows back into the U.S. And the third is, as we worry about global growth for all the reasons you described, when growth is scarce, people buy growth stocks. The U.S. stock market is a growth index, so it's coming out of the rest of the world back into the U.S. So I think it's a rotation story.
All right, speaking of growth stocks, tech has been up for debate, certain parts of it more than others. We're going to get Orcl earnings after the bell tonight. You told me earlier this morning on the stage there on the beach that you think software's bottomed.
Yeah.
Why?
Well, I think software has bottomed because we tend to price in the negative risks early, which I think's happened, and we've seen the multiples come in. You know, the IGV, which is the software ETF index, has lost 5 multiple points. Now the forward PE is 16 times. So to me, you're trading this like a cyclical industry now. And I think out of that universe of 110 stocks, many actually have durable businesses. So I think you're getting paid to buy it here at 16 times.
What about the broadening trade? Where does that stand? Now, again, if we're talking about, you make the statement that higher oil prices are actually okay, or if not better for the stock market, doesn't the broadening trade have an issue with that? I mean, if you start worrying about the impact of higher oil prices on the economy itself, how does the broadening trade work?
I think it's a good question. And we do have to remember there's the stock market and it's not always the economy. So I think the U.S. economy is going to have some risks for the reasons you described, which is why I think growth stocks start to look better, which is a lot of tech. And again, the U.S. is a growth index. I'd probably lean towards growth stocks outperform, which is not necessarily a broadening trade.
Let's finish with a quick one on Bitcoin, because I think it hasn't traded like many had suspected it would at times of turmoil in the market. It wasn't a safe haven play. It wasn't digital gold, so to speak. I mean, gold was gold, and gold traded well. So where does Bitcoin go from here? Is your confidence in it in any way shaken?
It's not. I mean, Bitcoin did basically break on October 10th because that was the biggest deleveraging event in the history of crypto. When gold went up, Bitcoin went down. But I think we have gone through a winter where a lot of the speculation and the leverage is gone. And I think this weekend kind of showed Bitcoin is coming back in vogue as a store of value because oil prices went up. But over the weekend, crypto prices actually surged, and Bitcoin, as you know, is holding above 70,000 now.
Holy crap. Holy crap. This man right here really said oil is bullish for stock. That is crazy. That is pretty wild. But you know, he presented his reasons, you know, America being a net exporter of oil, you know, those flows are going to come back into the United States, et cetera, et cetera. So, you know, touched on Bitcoin as well. You know, me being, I'm also investing in Bitcoin through IBIT. You know, I just hold the IBIT shares. I don't know. I'm not shaking out, man. Like this thing we can go down to 50s. We can go down to the 30s. And I'm just going to probably buy more. Like the more I read about Bitcoin, and it's crazy, the more I read about it, the more bullish I get. And I really try to look for a bear case against MSTR. And the more I read about MSTR, I just get more bullish about it. because of how much Bitcoin they have. But yeah, Skeptic definitely put it out here. He definitely summed this up. Tom Lee and Michael Saylor are on a generational wealth run. They're either going to be geniuses or top tier con men. I mean, that's pretty much it, right? You're either going to win or lose. You know, whatever your bullish or whatever your stance is on these two stocks, BMNR and MSTR, or Bitcoin and Ethereum. You know, again, I think there's a lot of things to be bullish about for both. So anyways, and of course we have Padre saying gold is shiny, and yes, gold is absolutely a great store of value. Okay, guys, let's move on from here. We have Dividend Sith putting in a couple of tickers there. CVX for Chevron. XOM is the right one, I believe, if that's the one you're referencing to, which is Exxon Mobil, and then XLE is the energy ETF. So he bought all these before the war. Yeah, actually, there was a, and I'll try to find it a little later if I remember, but there was a someone on one of these committees who dropped healthcare stocks and he dropped tech stocks and bought oil and chips, right? So he bought oil stocks and he bought Micron. So anyways, moving on from that, we have some news about Nvidia, and this is pretty much the news that dropped the software sector, right? This is the news that dropped the software sector, was coming from Nvidia having an open source AI agent. All right, so we're starting to see this seep everywhere. AI or agentic AI, whatever. You know, there's a lot of videos of people installing, you know, OpenClaw, which is, you know, from Claude, if I'm not mistaken, Anthropic. And these agents are able to, you know, hop on web browsers, click around, actually do tasks. They're actually able to do tasks for people. So, you know, an individual person, you know, their productivity can go up. And this is what we're talking about when we're moving, you know, when people are getting laid off or whatever, these companies are replacing them with AI agents, and not so much replacing them with AI agents. It's more that they're having a smaller staff able to do more because of these agents, right? Because of artificial intelligence. So this is the use case, and we're going to get into another use case for Palantir here in just a moment. But anyways, let's watch this short clip, 2 minutes and 30 seconds.
Nvidia now reportedly making its own version of the viral AI agent OpenClaw named NemoClaw. Wired reporting it has been pitching to companies including Salesforce, Cisco, and Google. Our Deirdre Bosa has more on that in today's Tech Check. This is going to be an interesting one, Dee.
It will be, Carl, and good morning. So first, let me explain what claws are. If you haven't heard of them yet, you certainly will. They're AI agents that run on your computer, and they do the work for you autonomously. So they're not chatbots, but actual software that can complete tasks step by step without you touching the keyboard. The most famous one, OpenClaw, it went viral earlier this year, and now Silicon Valley is obsessed. China is embracing it like crazy as well. The problem is that they are unpredictable, and there's no standard guardrails yet. So enterprises, they want the productivity gains, but they don't yet trust the tool. So that is the gap that NVIDIA is reportedly going after. Now, here's what makes this strategically fascinating. For nearly 20 years, NVIDIA's moat has been CUDA. That's the software ecosystem that locks developers into building with NVIDIA hardware. NemoClaw would break that playbook because it's open source. It runs on anyone's chips, not just NVIDIA chips. And that may actually be the bullish case. Think of Microsoft under Satya Nadella. He took a company built on Windows lock-in, put Office on the iPad, embraced Linux, and went cross-platform everywhere. The bet was that if you're the best, you don't need walls. You just need to be everywhere. That took Microsoft from a few $100 billion in market cap to over $3 trillion today. So NVIDIA may be getting ready to run a similar playbook. The enterprise agent market, it is growing. There's no slowing it. And NVIDIA can afford to give the platform away because more agents everywhere means more compute consumed everywhere, and no one makes better compute than NVIDIA. Now, the timing also makes sense strategically. NVIDIA's lock-in, it's already under pressure from the likes of Google, AMD, Amazon, Broadcom. They're all building custom AI chips to reduce their dependence on NVIDIA. So instead of going on defense, NVIDIA is racing to own the next layer up. And of course, guys, we'll be watching this very closely at GTC. We know that, you know, Jensen Huang is a huge fan of OpenClaw and has just been talking about it sort of nonstop over the last few weeks.
All right.
All right, so GTC is coming up. Really recommend people check out that whenever it does come out. Whenever Jensen Huang does these keynotes at GTC, like I watch every single keynote. I invested back into the Roundhill Nvidia ETF last year, and it was because I watched that GTC, the first one in 2025. And I just got super bullish on Nvidia when everybody was bearish. Everyone was saying that, oh, DeepSeek came out, Nvidia's cooked. Data centers are cooked and everything else is cooked that's related to tech. And we saw Nvidia go down to what, the high 80s, and look at its price now, right? And it topped up around $220, late last year. So I'm bullish at Nvidia. Bullish on data centers, right? The whole AI thesis, data centers aren't going away. You're going to need more data centers. The cool thing about this, though, the cool thing about agentic AI is people can put these AI agents on their local machines. All right, they don't exactly need to have these massive data centers. You can have a AI agent on your home computer, a Mac or a Linux, I believe. I don't think they have one for Windows yet. There's extra steps you have to do, but going further than that, when you start looking at commercial adoption, you start looking at companies that are going to, start utilizing this stuff. They're going to need the data centers. They're going to need the data centers to run these large models. So I think it is super bullish for Nvidia. I really do highly recommend. Maybe I'll stream a GTC, the keynote, because I don't know. I've never done it. Usually they're about an hour and a half long. It's kind of a long for a stream, but maybe I'll do that. Anyways, all right. So wanted to cover this. This is a big deal. Even though Nvidia kind of sold off, if I'm not mistaken. No, Nvidia got a gain, but the software sector sold off. All right. So more Nvidia news, right? Nvidia is going to invest in an AI startup, Thinking Machines, all right? And they're going to supply chips as part of a multi-year deal. So Nvidia made significant investment in artificial startup Thinking Machines and will supply the startup with chips as part of a multi-year deal. The two companies announced. Thinking Machines Lab, run by former OpenAI CTO Amira Murati, said it will deploy at least 1 gigawatt of Nvidia's Vera Rubin systems, which is their latest chip, to support Thinking Machines' frontier model training and platform deployment is set for early next year. Thinking Machines added, AI is the most powerful knowledge discovery instrument in human history, said NVIDIA CEO and founder Jensen Huang in a statement. Thinking Machines has brought together a world-class team to advance the frontier of AI. We are all thrilled to partner with Thinking Machines to realize their exciting vision for the future of AI. So it's Nvidia again, basically making deals to all these other companies to rely on their chipset, right? They're Nvidia Vera Rubins or even the Blackwells, but the Vera Rubins are going to be, in my opinion, probably the hot commodity soon. And we still see that DRAM is very, very important. All right, companies like Micron, SK Hynix, Samsung Electronics, these companies make DRAM, and Nvidia just eats up all of it, right? Eats up a lot of it. So anyways, moving on from that, Orcl, we have earnings. Okay. Earnings was huge for Orcl. We saw the stock rise 11%, if I'm not mistaken. Actually, we can see right here. Let me pull this up. So if we look at Orcl, they popped 11.91% in the aftermarket. Look at that big green candle. They smashed earnings. Okay. So let's take a look here. So what did they do? All right, their cloud revenue, which includes infrastructure and applications, came in at $8.9 billion. All right, up 44% year over year and above the $8.84 billion estimate. Infrastructure revenue soared 84% year over year to $4.9 billion, while application revenue rose 11% year over year to $4 billion. Orcl also said that the Fusion Cloud ERP revenue rose 17% to $1.1 billion. Total remaining performance obligations soared 325% during the period to $553 billion. So the biggest problem with Orcl is how much debt they're taking on, right? That's the biggest bear case against Orcl. But people are, it depends which camp you're in, right? Are you a believer in tech and, build it, they will come, build the data centers and the demand will come. The Orcl is saying that they have orders for all of their compute, right? Easily for all of their compute, but they don't have the data center data centers built out, right? So that's why they're focusing on building out these data centers. Even though there was some news that came out saying that, you know, OpenAI, Oracle, they're splitting up, you know, because OpenAI, apparently Oracle built a data center around Blackwell chips. This is coming from Michael Burry. So they built this data center around Blackwell chips, and the you know, OpenAI saying no, we want Vera Rubin now. So they're kind of like splitting up the partnership. But I don't think that is really the case. I really don't. I did find an article. We'll cover it real briefly. I just found it actually. But anyways, looking to the fourth quarter of fiscal 2026, Oracle said it expects revenue to grow between 18% and 20% in constant currency and 19% to 20% in US dollars, translating to a range of $18.9 billion to $19.2 billion. Cloud revenue is expected to grow between 44% and 48% in constant currency and is expected to grow between 46 and 50% in US dollars. Oracle also said it expects fiscal 27 revenue to be $90 billion, up from its previous guidance. So they beat and raised. In addition to the results, Oracle said it already raised $30 billion of the $50 billion it said it needed in February. This is the debt. This is why people are selling Oracle, because of how much debt that they have via the debt and equity markets. The $30 billion has come from investment grade bonds and mandatory convertible preferred stock with a record order book that was substantially oversubscribed. The company has not yet tapped the equity markets for the financing. So that's where they're probably going to get the remaining $20 billion that they need to complete these CapEx projects, you know, capital expenditure data center projects. So I don't know. I'm bullish on Oracle. I don't own a position. I do like. I have been following Oracle since last year, and they're one of the major plays on, you know, the AI thesis, building out these data centers. They're going to be, you know, left to be seen, right? Left to be seen, because if we look at their stock price over the last year, let's see, over the last year. This is a pretty intense sell-off, right? A very intense sell-off. Does not inspire a lot of confidence, right? And if we look at, you know, the 5-year, I mean, look at that huge rise, right? So can they reach these highs again? This was peak euphoria right here. This was peak Oracle euphoria. We had the ByteDance, split up, and Oracle was going to be taking over TikTok. Then there was all these deal announcements last year with Oracle. Oracle had all of the best news, right? And then they said, hey, we need to borrow money, you know, through the debt markets in order to build data centers. And then it just sold off like crazy. So if you liked Oracle at these prices way up here, then you'll definitely love Oracle way down here. All right. Moving on from that, Amazon looking to raise up to $42 billion in bonds to fund AI. So this is in addition to what they're already spending. All right. So I didn't have a chance to actually mark this up, but anyways, Amazon's looking to raise at least $37 billion and as much as $42 billion in debt to help fund its $200 billion in capital spending this year, Bloomberg reported. All right, the debt offering could have as many as 11 tranches with maturities ranging from 2 years to 50 years. Jesus. The news outlet added, citing people familiar with the matter, it could raise between $25 billion and $30 billion in the U.S. portion of the offering, and roughly 10 billion pounds from euro bonds that could be sold in 8 tranches. All right, maturities on the euro bonds could range between 2 and 38 years. The news outlet added. That is crazy. All right, so we're still seeing that these hyperscalers, these Mag 7 companies, all right, that are leading the way, they're still continuing to pour money into CapEx, into AI data centers, into just the AI trade, right? So again, when you're thinking about this, when you're looking at plays like Amazon or all of the hyperscalers, you know, Meta, start thinking about these second, third, fourth, fifth derivative plays, right? Dan Ives, Wedbush Securities, always says, look at those plays, right? You can start looking, and I say this on pretty much every stream every time I cover it, but, you know, you're going to have the software layer, right? And then who are running those? You're going to have, you know, the Metas, the Amazons, the Microsofts. But then you start looking under that, right? Who are providing the chips? You're going to have the AMDs, you're going to have the Nvidias, you're going to have probably later when they IPO, maybe the Cerebruses. And then, you know, you start looking lower than that, you're going to have Supermicro, SMCI, the data center stuff, Cisco switches, even though Nvidia has their own, networking equipment, but you still have that. You have Broadcom that also makes a lot of networking equipment and TPUs for Google, right? So you're going to look at them, and then you look even lower than that, you're going to have cabling. Okay, you're going to have cabling, you have copper, you're going to have copper wiring, Ethernet, you're going to have fiber optics. There's a huge, was a stock that Padre had mentioned several times. I think it's AAOI. This is not an endorsement. Of course, this is not endorsement, not financial advice. But if people want to look at, something else, for their portfolios, maybe do a little due diligence on a cabling or whatever, fiber optics. Probably look at Applied Optoelectronics. All right. I don't even know much about this company, so I just know that he mentioned it several times. I briefly looked at it. But anyways. Yes, and this is also a huge deal right here. These two companies, I believe, just made it into the S&P 500, if I'm not mistaken. Nvidia did a $4 billion commitment to Light and Core. Light, I forget who they are. So we have Light, Lumentum. Yes, Lumentum. This is not Lumentum Technologies. This is Lumentum Holdings, right? But again, fiber optics. That's going to be the next play. I was looking at Lumentum Tech, which is let's see, Lumentum Technologies. They haven't caught a bid yet. Yes, Lumentum. Well, it's Lumentum Holdings, the same one. But anyways, yes, there's them, and then there's Core Stock, Coherent Corp. So you guys can do some due diligence on this if you want to. Maybe we'll add it to the stream at some point in the future to actually deep dive some of these stocks, which would be pretty cool, I think. All right. All right. So anyways, moving on from that. All right. So moving on from that again, AI spend, CapEx, data center stuff, all bullish in my opinion. So whenever I hear, people and circular financing is a big deal. Don't get me wrong. That is a valid bear case against this, but I don't think, I just don't think that is a huge problem, in my opinion. It is kind of scary when you look at these charts and you see all these people just putting money into each other. Because you had, SoftBank that was saying, hey, we're going to be funding a lot of OpenAI projects. And then they sold their Nvidia position, right? Which was a huge amount. They sold their investment in Nvidia and gave OpenAI the money. And what did OpenAI do with it? They bought Nvidia chips, right? So it's really a circular thing, you guys know that phrase, a circle something, right? But anyways, I just believe in this whole AI trade, data center demand easily for the next decade. All right, easily for the next decade. So you have other ETFs out there. If you don't want to do any of the due diligence, if you don't want to look at stuff, if you don't want to actually look at these individual companies, we have like the SMH ETF. That's a big one. Something like for semiconductors. I don't know if there's one for let's see. Oh, I hate when I have to do this. Let's see. I'm an institutional investor today. I guess not. Like whatever. Okay. So anyways, you have something like SMH, semiconductor ETF. But you also have other ones out there. You have like SOX, what is it? SOX Q. You have SOX. You have other ones out there. There's SMHX, which is excluding the fabs. But there's so much out there. And then you start going down the rabbit hole, right? So you have the data center, you have all the chips that are going in there, all the equipment that's going in there. And then you dig even deeper than that, you have the metals, right? You're going to have the copper, right? Big, huge deal. You cannot build a data center without copper. That's what is used for the backbone, for power. So huge deal. And then of course, there's thoughts out there of uranium starting to be used for nuclear power later down the line. That will be definitely a 5-year play, right? Part of a 5-year thesis. If you're looking at, uranium as a play in your portfolio. I myself do have a small position in a uranium ETF from Sprott ETFs. URNM is the ticker in case people are interested in looking at that. I'm not endorsing it. I'm not saying you should go out and buy it, not financial advice, and definitely don't borrow my conviction. All right. You have to understand that stuff at a higher level. And even that for me is kind of a lottery ticket. Anyways, moving on from that, we have Meta buys AI agent social networking platform Moltbook. Okay. So like Facebook, but for AI agents. I have not even looked at this website, but it has been gaining a lot of traction, a lot of attention. But this is going to be social networking for AI. Absolutely crazy. All right. So Meta has acquired Moltbook, a social networking platform for AI agents, for an undisclosed sum. Axios reported Tuesday. Schlitt, and this is funny right here. Schlitt has been working on autonomous AI agents in 2023 and launched Moltbook in late January as an experimental third space for AI agents. All right. The platform was built largely with the help of Schlitt's personal AI assistant, Claude Clauderberg. So, you know, you have Facebook, social networking, buying up the social networking platform for AI agents. That is absolutely crazy that is even a thing. All right. But yeah, so bullish for Meta. I don't know. We'll find out. The market seemed to have liked that, you know, Meta up 1%. All right. Moving on from that, we have Palantir in the news, another use case for Palantir being adopted by the commercial markets. And this is a huge one. All right. Polymarket. So just a little background information. A lot of insider trading happening on Polymarket and Kalshi. Okay. And this was pretty much the wild, wild west. I think it was Kalshi's CEO that was on that we covered a while ago. And he was basically saying like, the feds don't really want to regulate this stuff. They will refer cases, right, that they find to, you know, the Justice Department or whatever, the Trading Commission, whatever. They'll refer those cases, but they can't do anything. It's pretty much a wild west, right? There is definitely a lot of insider trading. There was a you know, in geopolitics, going back to geopolitics, there was a bet on whether Khamenei, the supreme leader of Iran, well, former, I should say, would be killed in the first day of fighting or something like that. And of course, that person won that bet. But, you know, I think it's Kalshi that refuses to pay out that money. It was absolutely crazy, right? That is true insider information. So anyways, moving on from that, these two companies, the prediction markets, right? They could only police up so much. It's hard to police that type of stuff, especially when it comes to insider trading. So anyways, Polymarket enlisted Palantir to help with this. All right, so Polymarket is reportedly working with Palantir Tech and TWG Global's AI unit to help monitor its sports contracts as scrutiny grows around potential insider trading and prediction markets. Palantir and TWG AI will assist Polymarket in detecting, preventing, and reporting suspicious trading activity. Bloomberg reported, citing sources, the system will also screen participants against lists of individuals already banned from sports betting, the people said. All right, Kalshi, meanwhile, has taken a more public stance on enforcement. The platform recently referred two insider trading cases to the U.S. Commodity Futures Trading Commission, or the CFTC, and formed a committee that will publish quarterly data on flag trades and investigations. So now you have two of the biggest prediction markets, you know, platforms that are enlisting Palantir or using, or excuse me, only Polymarket is, not Kalshi. But, you know, it's another use case for Palantir. It's another use case. We saw that they were being used to detect, you know, mortgage fraud. They're being adopted in the finance, you know, sector to basically look for fraud as well. And it's a big deal, right? It's a big deal. Not just Palantir being used to, you know, plan large operations to go snatch a world leader out of their bed. Palantir can also be used for, you know, finance, can also be used for logistics, manufacturing, can be used for driving costs down. That company I was mentioning, that Lumentum technology company, I don't know if it's Lumentum. I might be butchering their name, but anyways, Palantir is also being used by them to drive costs down, right? It's helping them basically steer the ship in the right direction. So again, there's other use cases for Palantir than just DoD or DOW contracts, right? And government contracts. So I think that is a huge deal. I'm bullish on Palantir, been bullish on Palantir ever since I learned about the company and really dove into it. I know there's a lot of controversy around Palantir, you know, especially because of their, you know, involvement basically in conflicts, right? Their involvement in conflicts. Alex Karp, of course, is the CEO, and he's very outspoken. I like Alex Karp, so you know it's easy to invest in a company like Palantir for me personally. For me, all right. So, anyways, moving on from that, gold rebounds above 5,200. We kind of just briefly covered this, but you know we want to understand why gold is catching a bit up. Gold prices rebounded Tuesday on softer dollar and easing concerns over high energy costs and inflation after President Trump said the war in Iran was very complete, pretty much, and could end very soon. Don't know about that. But anyways, however, Trump also said that the war could continue for a while and that the U.S.-Israeli bombardment of Tehran overnight reportedly was the fiercest in the conflict. Gold is regaining some ground after President Trump signaled an imminent end to the war in Iran. Commerce Bank analyst said in a note, this can be explained primarily by a decline in interest rate expectations, excuse me, which had previously risen due to fears of inflationary consequences from increased energy prices. There was a interesting note, if I can find it, from the Kobesi letter. Okay, so some background information on all of this, because this is just a quagmire of craziness. So Russia-Ukraine war. Okay, we got to look at that too. Russia-Ukraine war going on for many, many years. Ukraine's been striking a lot of Russian energy infrastructure. So Russia's energy infrastructure has been pretty crippled during this conflict, during the Iran, Israel-U.S. conflict that's been happening over these last 10 days. Energy costs have been spiking, right? U.S. said, hey, we're not going to sanction any more Russian oil, right? So but Russia's oil infrastructure is pretty much, in the dirt right now. It's been heavily impacted with these strikes from Ukraine. So now they're also damaging Iran's oil infrastructure and energy infrastructure and the Gulf Coast. All right, the GCC, Bahrain, Qatar, Saudi Arabia, Kuwait, and the UAE. Right. So all of these nations, all their oil infrastructure is also being attacked. Right, attacked by Iran. So not good for the entire globe right now, right? It's not looking too good, right? As a bold strategy, Cotton, don't know how that one's going to play out. But some breaking news came out that the U.S. has asked Israel to stop its strikes on Iranian energy infrastructure, particularly oil assets, per Axios. And again, this is coming from the Kobesi letter. Details include President Trump's aim to cooperate with Iran's oil sector after the war. You just can't make this stuff up. All right, the request marks the first time the Trump administration has restricted Israel since the war began. Fears are growing that strikes could trigger massive Iranian retaliatory attacks on energy infrastructure across the Gulf states. It's already happened. It's already continuing to happen. Don't know how Israel is going to respond to this. I have no idea. But we're going to see it definitely over these next, over this next day and a half for sure. We're going to see what happens. But you also still have the G7. They convened today. They talked, about releasing, more oil from their oil reserves. Haven't found any news from that aside from this piece that we covered earlier from the IEA for the 182 million barrel release that they're trying to aim for. So again, I don't think we're going to be seeing this war stop anytime soon. The IRGC, which is the Iranian Revolutionary Guard Corps in Iran, has been pretty vocal about not ending the war just because the United States wants to end the war, right? They will probably continue, well into the next, probably couple of weeks. But anyways, we'll see what comes of that. This conflict definitely needs to end, and so energy prices can calm down, and the world can hopefully get back to at least a norm. All right, because again, the whole entire globe is impacted by this stuff. So I see we have 154 X user or viewers. So hello to you guys. This is the highest amount of X viewers I've ever had on this stream, and 27 on YouTube. So I appreciate you guys joining me for this stream. All right. So we're going to finish this off with a little bit of Bitcoin news. All right. Professional Capital Management CEO or ProCap, Bitcoin is more mobile and resilient than gold. All right. So if you're considering Bitcoin, don't know where to start. This is Anthony Pompliano. He runs his own stream as well. As a matter of fact, let me pull it up if I can. But Anthony Pompliano runs his own stream. I actually do watch a lot of his stuff, and he usually has Jordy Visser on there. And Jordy Visser is a former hedge fund manager. Yeah, I think he's running his own thing. It's something I think it's called Visser 22, if I'm not mistaken. But I do enjoy his content, right? I do enjoy not only Jordy Visser, but Anthony Pompliano, Big Bull. He did do a video with Peter Schiff. Okay, it was a really good video. Anthony Pompliano, I think, kind of got smoked a little bit, but they ended up actually having dinner in El Salvador, if I'm not mistaken, him and Schiff. They went for like a gold conference or something like that. But recommend you guys check him out. But anyways, here we go. Let's listen in on what he had to say about Bitcoin.
Joining me now, Anthony Pompliano, founder and CEO of Professional Capital Management. On set, great to have you. So much to talk to you about. But of course, we are going to start with Bitcoin because it has been outperforming over the past week.
Well, I think there's a couple of different things, right? One is Bitcoin is a resilient asset that is really serving as global insurance. And so anytime that there's chaos in the world, there's going to be people who run to Bitcoin. Gold also serves as that use case, but I think that more and more people, especially as young people get a little bit older, they get a little bit more money, they start to go and they buy Bitcoin in times of uncertainty. And I think institutions also, what is misunderstood is that in the institutions, the young people 10 years ago, they're now rising to the role of the portfolio manager or the CIO. And so they also will start to continue to add Bitcoin into their portfolios as well. And I think you see Bitcoin performing pretty well given what's happening right now.
And yet gold has not performed particularly well over the past, call it, week.
Well, if you think about what's gone on over the last year or so, pretty much everyone who's going to sell Bitcoin off of the highs has pretty much already sold, right? Everyone who's going to buy gold has pretty much bought. And so I think that you saw two assets that diverged, and these two assets, they serve as a store of value. And I know that the gold bugs have been doing their victory lap for the last year. I like gold. I don't hate gold in any way, but I do think that Bitcoin is a 10x better asset in terms of it is more divisible, it is more mobile, it is much more resilient than gold. And so I think that over time, what you're going to see is you're going to see more and more capital flow into Bitcoin. And look at the ETFs. What took gold's ETF 15 years to do, Bitcoin has done in less than 2. And so I think that just naturally you're seeing the rapid adoption of an asset. Now it is going to be volatile. And I think people love to celebrate when Bitcoin falls. It's down 50%. Well, if that was the bottom of the bear market is just a 50% drawdown, then it's the best performing bear market of all time in Bitcoin's history. And so let's see what happens.
Interesting. Do you think then, in light of that and what we're seeing with Operation Epic Fury, that Bitcoin is shifting gears in terms of how it's trading? Because the conversation had been that this is, you know, a risk-on asset. It's trading as such. It's a liquidity indicator. It's not a store of value. Do you think that this is an inflection point?
Well, I think there is a very, very big misunderstanding when it comes to what's happening in the global economy right now, and specifically with inflation domestically. If you look at inflation expectations, people have been saying that we were going to get sky-high inflation because of the tariffs. And I was very loud about the fact that we were not going to get that. The tariffs were going to be deflationary. Now, if you look over the last year or so, what we've seen is tariffs are deflationary, deportations are deflationary, AI is deflationary, and robotics are deflationary. And we see this happening throughout the economy. And so the big...
So real quick, you know, like we've been talking on this whole stream, you know, how productivity is supposed to go up because of AI, the introduction of AI, robotics, autonomous, you know, robots, everything else, agentic AI. That's what it means when he's talking about deflationary, right? Deflationary in the future. Because more companies will be able to do more with less people, less staff, right? And, you know, the revenues should come from all that as well. So anyways, continuing on with this.
Risk right now is still deflation, not inflation in the U.S. economy. And I understand that oil has spiked in the short term and people are going to freak out about that. This has been going on for 8 days, this Operation Epic Fury. And so let's say that it ends in the next 2 or 3 weeks. It would have been a short-term impact to oil prices. And the deflationary nature of what's happening in the economy is still a much, much bigger concern than a short-term oil impact. And I think what people also forget is that, take housing as an example. The government is still saying that housing prices are growing. Truflation, which is a real-time measurement, is saying that housing is in deflation already. It's down 1.5% over the last 12 months. If that is true, housing is a much bigger input into the CPI calculation than, let's say, oil or energy is at around 5%. And so I think that people, it's very easy to get attracted to the headlines and the volatile oil price. But again, the structural thing that we are facing is deflation because of deportations, tariffs, AI, and robotics.
Yeah, and of course we get CPI and PCE readings this week, and this will be before any spike we've seen in energy prices. So we'll look at that according to your lines of thinking. At what point, though, if you have energy, if you have oil prices at these sustained levels, we know that funnels out into other parts of the economy. So at what point does that change, if it changes?
Well, if it's prolonged, right? If we end up going 6, 9, 12 months with really, really high oil prices, obviously that'll have a very big impact. The other thing that's pretty interesting, though, is that the U.S. dependency on oil as a percent of production, right? So if you think of like how much energy do we need to consume from oil specifically in order to produce 1 unit of GDP, that has been going down over time. We're actually lower today than we were, let's say, in 2007, 2008. Some good research has been put out about that. Now, it doesn't mean that we're not dependent on it at all, but I do think that people are still caught on this idea that if oil prices go higher, then immediately we get, you know, higher consumer inflation. And I just don't see that happening in the economy.
All right, so let's put it all together. We've got a war in Iran. We've got a spike, at least for now, 8-day spike in energy prices. We've got AI disruption concerns. We've got cracks in private credit, and we have a weaker jobs report. How do you invest right now?
Buy Bitcoin.
Absolutely crazy.
We've got a spike.
Yeah. So anyways, there we go. All right. Bitcoin, all the geopolitics. And he brought up a good point too. And this is my first time actually watching this clip. So, you know, I'm trying to commit some things to memory here, but he did bring up some interesting points. One of the interesting points is, you know, what happens after this conflict concludes? The only thing we had was high oil prices. Again, when we go back to normal, then what next, right? So people getting, you know, scared out of their positions, you know, they're selling things, selling their Bitcoin, selling their, you know, Nvidia stock, selling everything, right? Everyone's selling and flocking to things that are more defensive. But what happens when everything just goes back to normal? Right? I'm not saying we're going to just continue this bull market up, right? We've been chopping pretty wildly these last couple of months, and I mean, it does bring up a good question. What's next after this? After this happens, and that post you saw that Trump wants to cooperate or wants the energy sector in Iran to cooperate with the Trump administration. I mean, what does that look like, right? What does that mean? And I don't know. Like that to me is wild that he would say something like that. I mean, Iran is a very, very chaotic place. Very different values, very, very different set of values. And I don't think they're just, like I said earlier in previous streams, right? This is not Iraq. This is not Afghanistan. This is Iran. They are a regional power. And them, just embracing democracy is not going to be a thing, right? And you can only do so much change with airstrikes. And the whole thought of boots on ground, I think, is not really going to happen. The U.S. was opting for a regime change. It's not going to happen. And I'm going back into this whole geopolitics thing. I really should get off of that. Okay. So anyways, going back to Bitcoin, going back to the markets. All right. So she basically summarized some of the big things. That 92,000 job loss was really a big deal, right? A really big deal. We'll see if those numbers get changed later in the future, probably revised, probably lower. Anyways, guys. Okay, so I think that'll do it for this stream. All right, covered a ton. All right, we covered a lot of information. I hope you guys found it valuable. We're pretty much at the top of the hour here. So I will stick around here for the next, 15, 20 minutes if anyone wants to cut it up in the chat. Or let me see. Yeah, if anyone wants to cut it up in the chat. I don't think I'll be doing or bringing on a guest today just because I have to get going here very shortly. But I'm actually excited for this. I hate to circle back to the beginning of this stuff, but for any viewers, who are probably high yield investors, I'm not saying go out and buy this, but if you're a current shareholder, I think this is a big change, a really, really big change. Big deal anyways, because hopefully as the Mag 7 continues to rise, this ETF will rise along with it. We got to play the so D Tommy Tube for democracy. We got to play that theme song for Helldivers. I have not played Helldivers, but I know they always like to shout for democracy. So anyways, how's the portfolio challenge? Actually, that's a good point. Let's bring up the portfolio challenge. Let's see right here. All right, so this is for today. All right, hey, look at me, look at that. All right. I can't believe Citizen of the Year is up 3.5%. All right, Victor, you're up. You're up by a lot. You're up by 7%. All right, so let's take a look at all the portfolios. So for any new viewers, this is the portfolio challenge that we started in the Discord. If you guys want to join the Discord, a link is down below in the description somewhere under Stay Connected or there. But anyways, the challenge was you get a hypothetical $100,000, invest in up to 10 stocks. Cannot be it cannot be like broad-based ETFs. So no SCHD, no high yield stocks like Ulti or whatever, no thematic, no sector-based ETFs. Has to be your own conviction picks, or you could do spot price ETF or spot price ETFs, things like IBIT for Bitcoin or GLD for gold or SLV for silver, right? So that was the challenge. And the winner, we're gonna watch this play out over the year. And the winner is going to get 1,000 USDC. All right. So that was the challenge. It started off with 100, and then I upped it after the challenge to 1,000 USDC. So let's see. So Victor, you are up 7th. You must be up way more because again, that one stock is not populating for you. So you're probably up maybe 100 and I don't know, maybe 110. But yeah, you're up quite a bit. So awesome. So you're crushing it so far. Let's see. We have Pay Me in Dividends, another YouTuber. Check him out. But his portfolio is up 101,000. If we look at what his picks are, we have Netflix, Reddit, Coke, and DTref. And DTref has been absolutely pumping. It's a minor company. Victor Crooks, for you guys, for the viewers, these are his picks. All right. He's a commodities investor, invests in a lot of miners. So if you guys want to take a screenshot of this, you guys absolutely can. Let me just hide that. Whoops. Let me hide that. Yeah. So it is missing that other stock. Again, I cannot figure out why Seeking Alpha won't populate it. Maybe I'll move this over to spreadsheets, but I hate spreadsheets. I hate updating it and having to wait for it. It's easy enough to do, using like Google spreadsheet. I just don't want to do it, but maybe I will. Maybe I might have to. But anyways, so yeah, let's look at. So for me, I'm finally above 90. I was down to like 86 earlier. Excuse me. So we have a couple other people. So anyways, these are my picks. I have CoreWeave, Ondas, BMNR, MSTR, GLD, IBIT, NB for NEO, and then USAR, which I actually do hold, and then UAMI, which I also hold, and then Palantir, of course. All right. So these are actually all my conviction picks except for CoreWeave. I'm still kind of torn on CoreWeave myself. I don't know if I'll actually open a real position in CoreWeave, but I wanted to include it because it is a pure play data center, and I'm bullish on the data center plays. So, anyways, I included them. Let's see. So we also have Evil Duck, man. Evil Duck is up in here, but again, his portfolio also does not populate, which is a bummer. I mean, everything works, everything is showing, it just does not populate. I wonder if I can go here and see. Oh, there we go. So we can see he might actually be doing pretty well. Let's 10, 20, 30, 40, 50, 60, 70. Oh, this is the value. Oh, never mind. I don't know if this is the value post gains or not. Yeah, Seeking Alpha is failing me. All right. So anyways, Evil Duck is there. Citizen of the Year, another YouTuber, does finance content. He went all in on Micron, the absolute Chad. All right. So he went all in on Micron, had a pretty big dip, big correction there, but he looks like he's climbing back up, right? He looks like he's climbing back up. So he's doing pretty well there. All right. So Micron up 3.5% on the day. Super straight guy. Let's see. And he's in the chat. I don't know if he's still there, but he's in the chat. He went with Gold, Costco, JP Morgan, IBIT, Amazon, CrowdStrike, Palantir, MSTR, Tesla, and Nvidia. And his portfolio is he's still under 100K. So a lot of us are recovering. A lot of it. So the challenge actually closed in January, and that's when we saw, a lot of the sell-off happening. But again, we've been chopping up and down. So not surprised none of us are really, except for Victor and his bullshit penny stocks. I'm just kidding. But outside of that, most of us are not over 100K yet. There's this idea that this spring-loaded market is forming, right? And once we get through this chop, once we get through all this nonsense in geopolitics, once we get through all that, the spring is gonna unload, and we're gonna see the stock market climb to new highs, right? That is kind of what is going on right now. Tom Lee, in the interview we watched, there was thoughts that there's going to be this big sell-off that's going to happen sometime this year. What's his name? Not Tom Lee. His partner in crime, I forget his name. It's eluding me right now. But anyways, he's saying that there's going to be a potential sell-off in the November, September timeframe, around there, or September to November timeframe. There's going to be that 20% correction, or that 15% correction that we're looking for the broader market. I don't know. And I'm just parroting what they say. They don't really have, or they haven't presented any proof of that, or why they believe so. They just think it's going to be in that time frame. Thinking out loud, I'm trying to think what would cause it. I can't think of a catalyst. The only thing that is going to change, and I don't think interest rates are going to save us, to be honest. I really don't think interest rates are going to save us. But again, we have interest rates possibly coming down in the second half of the year, right? So after May, after the new Fed is appointed, Kevin Warsh, as soon as he gets in the seat. All right, so we'll have to wait and see what kind of his thoughts are. He's been a monetary hawk, but he's also kind of bullish on Bitcoin, for those out there. And he has talked, in the past about lowering rates. And of course, Trump is not going to put someone in the seat that wants to keep rates steady, or that wants higher rates. He wants lower rates so the United States can refinance its debt, because it's paying, I think, 1.2 trillion or $2 trillion in interest every single year. just on the debt that it has. Anyways, getting back to this challenge over here, Super Dividend Rocket, another YouTuber out there. Check him out. I actually haven't seen him in a while, but he travels around. He's been traveling around. I believe he lived out in Taiwan, but he was visiting Vietnam. So shout out to you, Dividend Rocket, if you're watching. But anyways, we have UNH, Micron, BMNR, SanDisk, CrowdStrike, Costco, Amcor, I believe it is. Yeah, Amcor Technology, Arista Networks, Goldman Sachs, and Google. And his portfolio has taken a little bit of a beating, down to 95K, right? But it is recovering. Again, a lot of software. Bankshot Bobo, shout out to you. All right, CoreWeave, and he has some defense contractors in here. L3 Harris, he has UAMI, ASTS, MSTR. I don't even know who this is, but it's a Chinese mining company, if I'm not mistaken. Amazon, Micron, Lam Research, and Novo Nordisk. All right, so he is actually up for the day. Yeah. So then we have Serial Beggar, who just memed his portfolio and went with just tickers that spelled out his name, and he's actually doing quite well. I'm actually surprised by that. He's actually doing quite well for just these random picks. And then we have OK, all right, / Alex, all right, if you're watching, but he went with Palantir, Amazon, Home Depot, Walmart, Spotify, which I thought was really interesting, Tesla, and American Eagle Outfitters, which I thought that was another interesting. I didn't even know they had a stock when I first looked at this. I was actually quite surprised by that. But anyways, he is actually down for the day, just a little under 50 basis points. And then we already covered these two. So that is pretty much everyone's portfolio and how they're doing and where they rank on this challenge. Again, this is going to be a year-long challenge, so we'll tally everything up at the end of the year. And I know Evil Duck and Victor, they have some weird things happening with their portfolio, but I have the numbers, I have the cost basis, the tax lots or whatever, so I know when they bought in, and we also saved it in the Discord, so we'll be able to track everything throughout the year. And when December 31st happens, we'll tally everything up and see where everyone sits at. And I'm hoping I win because I'll be able to spend my own 1,000 USDC on something. Maybe I'll just, I don't know, maybe I'll dump it into something or use it to buy more coffee. I have no idea. But if I lose the challenge, well, I'll have to transfer away my 1,000 USDC. All right. So that is it. Why does Eugene's portfolio look so weak? Bro, let me cook, all right? Let this portfolio cook a bit, okay? It's weak now, and I have a lot of freaking exposure because I have BMNR, MSTR, Ethereum, and Bitcoin. I have like 2 plays on Bitcoin. I don't know why I did that, but I do. These are, like I said, these are my high conviction picks. GLD I put in there because I actually do own a gold ETF, GLDM, or yes, GLDM is the ticker. For those who are curious. So, and then Palantir, of course, has been getting hammered, but hey, just let it cook a bit, brother. Let it cook a bit. Stop buying decaf coffee, man. I could not, it's crazy. Whenever I get the cravings for coffee at night, like I was watching a show, a TV show or something, and I saw this like dude just drinking coffee, and I was like, man, that's like just the sight of coffee made me want to drink coffee. I don't know. I guess you don't know when you're really addicted, but man, I should buy decaf. I don't really drink decaf coffee at all. Mostly because it comes in that instant stuff, and I hate instant coffee. I do not like instant coffee. I'll force you to buy gold with it. If I win the challenge, I'll buy gold. All right. Kramer is Eugene's quant. Oh, that is bad, bro. That is horrible. That is horrible. Yeah. I should just make or somebody should make an inverse huge ETF or inverse huge position. If somebody did that in the community, I would have definitely been upset. No, I'm just kidding. But that would have been hilarious if someone just went anti my entire portfolio. But I mean, what would you pick? What would be the inverse? I guess you would have to be shorting all of these positions or finding whatever. Because I picked this portfolio based on themes, right? So I chose Ondas because of drone warfare. Ondas has actually been doing pretty well, and they had their earnings coming up, if I'm not mistaken. I think it's like March 20th. I could be mistaken about that. No, Ondas already had their earnings. Yeah, I was going to cover them, and I totally forgot. We actually ended up going off tangent for the stream, but Ondas smashed their earnings. They did really, really well. But yes, Ondas, for those who don't know, is a counter drone company, and they've been picked as a prime contractor for a border autonomous drone project that's happening in the United States. And they have a couple contracts in NATO. They have a couple contracts in Europe. But the interesting thing about Ondas, aside from its military application, because they went on a huge acquisition spree and buying up all these other drone autonomous companies, robotic companies. The interesting thing about Ondas is they have this system called the Iron Drone system, and basically what it is a box full of drones, right? A big box full of these drones that can get launched whenever these smaller drones are coming in. And if you guys have been following what's happening in the Ukraine-Russia war, it's a lot of these $50 drones with a little munition, and they run into these $1 million tanks and absolutely destroy them, right? Absolutely destroy these tanks, absolutely destroy other vehicles, other equipment, or they can attack troops, right? And that is the way, and we're seeing that happen in warfare even now. And I hate to go on this tangent because it can get pretty crazy, but we're seeing that happening. And Ondas, what it does is it can deploy these drones and capture these incoming drones autonomously, right? They actually do have a partnership with Palantir, and that's how I found out about Ondas. And if Palantir was bold enough to make that kind of a partnership, and Ondas, I thought it was interesting. I invested in Ondas when it was like 70 cents. I wrote it up to about $11, and then I sold my position. So it was my first stock pick, my first penny stock, first stock I ever bought where the due diligence was kind of obscene, an obscene amount of due diligence. And I didn't like Ondas at first, but then the more I read about it, the more I understood the technology and the direction that they were going in, because they don't just do counter drone. They also have their own network. So think like a 4G, network, but they have their own network that they developed, right? Which is a big deal, especially for autonomous drones, right? So again, a lot of interesting things with Ondas. People can check them out. I still think they probably have room to grow, especially for their stock price, maybe $15-20. At least I think. I mean, that's a shot in the dark. I'm not basing that on anything, like no charts or anything. So anyways, let's see what else we got here. Yeah, so I was talking about the portfolio, the 100K. This is hypothetical. I actually do have positions in most of these, except for NB. I think I sold that a while ago. Ondas, I sold a while ago in CoreWeave. Those are the only ones I don't have. I do have stuff for BMNR, MSTR, or MSTW, GLD, USAR, UAMI, and Palantir, or PLTW. Checking the chat here. Let's see. Sergio, I appreciate that. Thank you very much. Well, you are a vet. I'm sure you had those late night coffee runs. Thank you for your service. I appreciate that. Thank you. Let's see what else we have. Can't wait for YieldMax to come out with an anti-YieldMax ETF. That's awesome. Let's see. Skeptic says an anti-YieldMax ETF, just buy ORR. Oh, that is true. That is true. Yeah, ORR had some of those ETFs in there. I totally forgot about that. Sean says CoreWeave is the best company on your list and it is down by 25% in the last 6 months. Well, damn. I did read that there's a hedge fund manager who's starting to make waves. He turned like, I think $30,000 into like a couple $100 million. So he's been getting a lot of notoriety out there. But I wanted to check his filings, or check the 13F filings, because I believe he does have CoreWeave in his portfolio. He did open a position in CoreWeave. But again, I know of CoreWeave. I thought about buying the IPO last year when they IPO'd. I thought about it, but I opted against it. And the interesting thing about CoreWeave, well, both good and bad, and there's that word interesting again, right? Shout out to you, Victor. But anyways, the thing about CoreWeave was, before that, they were an Ethereum or a Bitcoin mining company. I think it was an Ethereum mining company. And then they basically turned into a pure play data center, right? They have partnerships with OpenAI, partnerships with Nvidia, but their biggest customers is like Microsoft, OpenAI, right? That's their biggest customers. And that's not good, right? That's too much concentration. They've been under a lot of fire over these last couple months, and CoreWeave didn't do well on earnings, and they were talking about, you know, further CapEx spend, which, you know, promptly sold the stock off. But again, looking at into the future, build it and they will come. I think CoreWeave does have a bright future if the demand for data centers materializes, right? I think CoreWeave does have a bright future. Now, how bright of a future, you know, what are we talking about in terms of valuation and where their stock can be? You know, I'd be lying if I said, you know, if I gave you guys price targets, because I certainly as hell don't know. But is it worth right now what it is? You know, $74. I mean, let's take a look at what CoreWeave was looking like post or before the huge sell-off started happening back in November, October timeframe. Yeah, look at that. Oh, I should have bought around that time. Look at that. 326% on CoreWeave, right? And that was just in a couple months, but that was like peak euphoria as well, right? Into June. And then we had the sell-off happening. And then now here we are. We're down to like reasonable levels, right? Because it certainly was not worth $183. But is it worth what it is now? Probably. It looked like it went full circle. I mean, it IPO'd at what, $30, I think, or $40 a share. You know, so even if you held, you're still up about 87%. So we'll see. Again, there's still a lot of bearish, you know, sentiment out there. There's still a lot of bearish sentiment out there for anything related to AI. But as we see, you know, AI agents coming into play and being more adopted, you're going to need more data center space. You're going to need more data centers, period. And you still have the Stargate project, which is ongoing, right? That's OpenAI's, you know, leading the way for the Stargate project for, you know, just build outs of massive data centers. And in Europe, you also have their own, you know, sovereign AI data center build outs as well. Who do you think they're going to be picking for, you know, suppliers, right? Who's going to, what chips are going to go into those data centers? So a lot of stuff. Yeah, and you bring up a good point, Sergio. Insider knowledge to buy pre-IPO. That is what my dog said. The interesting thing about CoreWeave, again, their CEO Michael and Trader and some of the C-suites were selling off a lot of stock. They did this before. And that's what made me not want to invest in CoreWeave, is because of that. You know, it was the C-suite not really believing in CoreWeave, right? That's why they're selling everything pre-IPO, which was, you know, kind of a red flag in my opinion. But again, I mean, CoreWeave does have a lot of backing. It does have could have a bright future going forward. So let's see what else we have. So we have another ticker. All right. Spark AI still has room to grow. SPAIF. There you go again with all these weird penny stocks. Spark AI. It's on the OTC market. So a ticker for you guys to check out. Oh my God. 576%. 576% over this last year. And it looks like it's starting to climb back up. All right. So it had a pretty nice sell up, man. This might be a moonshot. You know what? This might be a moonshot. If you buy $1,000 worth of this could be a moonshot. So let's see what else we got. So we have from Skeptic, we have a total world momentum ETF. I think we covered this as well. AVOS. This is basically a SPMO, an SPMO ETF. Let's see, stock. Yeah. I think, yeah, we look, or it's AVO or AVOS. Let's see. This, yeah, I believe it's AVO. Yeah, if you guys know what SPMO is, it's a momentum ETF, you know, for you know, the S&P 500. AVOS is global equity momentum ETF. Yeah. SPMO, I don't know if SPMO has been doing so hot this year to date. Let's take a look. SPMO. Yeah, it's been chopping along with the S&P 500. So it's been chopping a lot. But if you guys zoom out if you guys zoom out for SPMO, it's actually done very, very well over time. All right, let's see what else we got. CoreWeave bull flag, says Sean. Yeah, Grab has been making a lot of waves as well, especially those people who live out in Southeast Asia. Grab has been making some headlines. A lot of their competitors have been closing up shop in some of these countries. I say Grab ETF. I meant Grab stock, but whatever. We have Grab, right? So if you want another moonshot, Grab could potentially be it. There's a few YouTubers out there that cover this. I believe Pay Me in Dividends had opened a position. I think he posted that publicly as well. So I'm not sharing anything I shouldn't be sharing, but I believe Pay Me in Dividends has been following the stock as well as Amit. So if you guys follow Amit Investing on X or Amit on YouTube, I do enjoy his shows. His shows, cover pretty much everything, right? It's just finance, macro news, stocks, that kind of stuff. I do enjoy his show, but he's been a big believer of this stock. Me, not that I know too much. I do use Grab almost every day. Like religiously, I use Grab a lot. I use it to order not only just groceries, but also, food, because I like to order out quite a bit if I'm not cooking anything. And then you can also, like Uber, you can also call a Grab to pick you up and take you from point A to B. You can do like a motorbike. You can do a car. You can even do long distance, from city to city. You can even do long distances, right? That, take up 1 to 2 hours. So Grab is pretty cool, pretty neat app. I do like it and I do use it a lot. And their revenue has been climbing like crazy. I mean, look at this. They have been doing really, really well over these last couple of years, over these last couple of quarters, I should say. But look at that. Revenue year over year. And again, they have to report earnings. They have earnings coming up, but year over year, they're up 18.5%. Their net income is up quite a bit, and their profit margin is up quite a bit. So Grab has been doing really, really well. And again, a lot of their competitors have been leaving some of these countries. I think Food Panda was one of them. Food Panda was one of them. I forget which country they ended up leaving because they had way too much debt and they weren't making enough revenue. Because Grab has a lot of the market share out here in Southeast Asia. So from Skeptic, weekly reminder to stand ATTR or ATTR. Yeah. ATTR is a defensive ETF for those who might be a little more interested in this for something for their portfolio. Year to date, it's up 1%. All right. This is a fairly new ETF. It came out October and it's up 1.62%. All right. So it's not exactly going to be a grower, right? A huge growing ETF, a growth ETF, but still up 1.52 or 1.62% is not bad either. Right. It hasn't lost anyone money. So that's a good thing. Well, ladies and gentlemen, that'll do it for me. I appreciate you guys joining the stream. Let's see what we have for X. We have 173 viewers for X and 22 viewers for YouTube. I appreciate you guys joining me on this stream. You guys have a great rest of your evening, great rest of your day, wherever you are in the world. And I will see you guys in the next stream. You guys take care and have a great night. All right.